Hi, good evening, everyone, and welcome back to the YouTube live session of MSFL. I'm Jay Thakkar. I'm heading the Equity Research Department at MSFL, and we have been doing this YouTube live session since a couple of time now. And as anticipated, markets are heading upwards, and all our targets are getting achieved. So that is one thing that I would say that we have been successful in timing and providing the right direction, and that is what is our aim, to provide the correct direction to all our investors or our clients. We try our best for that, and also recommend few sectors, stocks, answer your queries, and provide you the forward outlook, micro and macro both, and also focus on the triggers which will be driving the markets ahead, also providing you the overview on the results, because the result season has already started now, right, friends? So one thing I would say, that in the last YouTube session, okay, in the past couple of YouTube sessions, I had mentioned that we were bullish on Nifty, Sensex, and we had a target of 14,350, right? And on Bank Nifty, we did say that 32,100 levels and above those levels we can see. So those targets have been met. And see, the best part of this YouTube live session on Tuesday is that we every week we have this weekly expiry as well. So we would be touching a bit on the fundamental area, and thereafter also focusing on the technicals and derivatives part, so you get an overview of the market, and which will help you from the short term to medium term perspective, right? So let me just start with the updates now. Initially, let me just provide a few updates. The thing is that we have been saying that auto is one sector which can be the sector of the series, and so far auto is performing quite well. Okay, and this is what we have been saying since Nifty had actually fallen 600 plus points in the last month, somewhere in the middle of the month, and we said that this is a good buying opportunity. One should not be fearful. In fact, take this as a buying opportunity, and one can focus on these stocks or these sectors, right? And it has worked well, I would say, friends. One thing I would like to add is that there are few sectors which have performed quite well so far. I mean, and we expect that those sectors will continue to perform going forward as well, right? And there are few sectors which we think now are going to perform from here on. Okay, so let me also, in today's session, let me also, give you a brief on which sectors are going to be performing from here on. And thereafter, let's also check that those sectors which have already performed, are they already overvalued? Is everything priced in, or there is some more steam left out there? So this is what we need to do in the last quarter of FY 2021. Few triggers I would like to say which are there for the markets going ahead. I would say, first of all, we have been discussing a lot in the past sessions of ours that US elections are going to play a very important role, and the outcome of that is going to be something which is going to be providing the direction to the markets, and that has happened as anticipated as well. I mean, we have been saying that nothing much on the downside would happen to the markets, and this month, in fact, most of the things are sorted out as far as US elections are concerned. So that trigger is out now. The immediate trigger for markets, friends, is the budget on 1st of February. And that is something which is, market is already anticipating quite a lot when things are of it. I mean, as our Honorable Finance Minister had said, that, this could be one of the best, budget in almost past 100 years. And the expectations are already built now. We're quite hopeful that, she lives up to that. And the triggers which can be seen going forward, is what I'm going to discuss today. That which are the sectors which are going or which are likely to be benefited and which require some focus. And also we're going to touch upon somewhat on the Q3 earnings so far. Okay, so we have started with the obviously as usual we always start with the ID numbers. Okay, prior to that we did get the monthly auto sales numbers, and monthly auto sales numbers were definitely quite good. I would say that we are seeing the demand coming back into the auto sector. And I would say that despite the disruption or kind of a halt pause, you say, which was created or which happened due to the COVID or the lockdowns and everything, that didn't have much of the impact in most of the sectors. And as far as auto is concerned, that's quite sensitive to it, right? And we are seeing the traction into that sector. We are seeing demand coming back out there, and the few auto names like Tata Motors, which we have been mentioning as well, that that is in fact performing, and even that is performing quite well comparatively. That clearly indicates that there is this demand which we are seeing is the actual demand, is not just that there was some demand which was already there in the market. Just because of the COVID we didn't see that, and it is just that one time effect, okay, which we say. It is not that. We are going to see this continuing going forward as the economy expands. And whenever the economy expands, friends, historically we have seen that auto has been one sector which has performed quite well. I mean, if you see in the past one decade, so we have had this kind of an uptrend in the markets, taking Nifty as a benchmark. So we have seen Nifty performing almost like in 2009-10. Then from 2013 to 2017, and thereafter somewhat in 2019, and now back in 2020 as well, right, friends? So my point is that in all of these phases of an uptrend, auto has majorly performed. It's just that from 2017 to 2019, or maybe the start of 2020 or mid of it, when we had seen that transformation happening from BS4 to BS6, and there was a lot of capex involved, and till there was no rise or not much of demand, until these companies don't go above their break-even levels. I mean, there might be some erosion of margins or maybe profitability, but now that thing has gone, and companies are seeing green shoots out there. So the sector overall is seeing green shoots out there, and I think that is the early signal which we are getting that auto sector is going to perform from here on. So that is also one sector, friends, which we are seeing as one of the sector to focus from the budget point of view. Let me just tell you that the PV and two-wheelers are expected to post strong double-digit growth in FY 2022 due to the low base effect, first of all, and increasing performance of the personal mobility post-COVID. The second point which we are looking at is that is going to be very, very important, which I am personally looking at, is I'm quite hopeful that scrappage policy. That is something, if something on that comes out, then it is going to be the big boost for the auto sector. Also, the phase 2 of BS6, if that is postponed from FY 22 to maybe 23 or 24, that could also provide a good support to the sector along with the scrappage policy. That would be double impact, I would say, on the positive side. The freight demand increase could also provide a trigger for the M&H CV industry. The tractor demand is expected to improve in FY 22 on account of healthy water reservoir levels and expected pickup in commercial demand, assuming the normal monsoon. So if you see, then there is overall growth expected in this particular sector, and this is one sector, friends, which one should look out for the calendar year 21 or maybe FY 22. This is one sector which has not performed that well compared to the benchmark indices, but then or maybe relatively, if you see to maybe IT or pharma, but then from here on, from the point of view of FY 22, this is one sector, friends, which one should still continue to be bullish on. And I've been saying this since past 3 to 4 YouTube live sessions, friends, right? Second sector, which has already performed quite well, and from here on it is likely to do good, is chemical sector. Strong demand from downstream industries and a trend of shift in supply chain from China are the key factors, triggers to watch out as a part of this tailwind. And this is likely to expand, friends. Trust me, I mean, the kind of transition which we are seeing, we do see, more of, demand coming in for the Indian companies, and we're quite bullish out here as well. Companies have already started their expansion significantly, is what we have been observing in these sectors, keeping in mind the structural shift in global demand to Indian players, and that is going to be the key trigger. The second sector in which you are bullish and is the IT sector. This has already performed quite well. We have been seeing the numbers. Okay, the TCS numbers you see phenomenal. I mean, that is definitely providing some good traction coming back into the IT stocks, which had gone sideways technically, if you see. So maybe Infosys, or maybe the mid-cap IT names, which had gone sideways. Now with the results of TCS, the hopes are built in there as well. And there's good amount of cash which is lying in the books of Infosys, and we're expecting some buyback out there as well. We've already seen a buyback coming from TCS and Wipro. Hopefully from Infosys as well, we do see that. In fact, HCL Tech also has good amount of cash, but comparatively Infosys has more cash on its balance sheet. HCL Tech had actually done some buyback, or not buyback rather, I would say takeover last year. So there is a possibility that we may or may not see this kind of buyback offer from HCL Tech. Hopefully we see that, but Infosys definitely, I think personally that there can be a buyback offer, and because of which we can see some more price up move from here on as well. And we do think that digital transformation theme and work from home continues to gain scale for the IT space. That is one thing, and which we think would continue for some more time as well, for another 2-3 quarters going forward. So at least for the first half of FY22, we would see this continuing. In October 2020 update, combined market annual contract value, that is ACV, was up by 4.4% year on year during first half of current year 20. Despite better deal activity, IT spend trends in current year 21 could remain uneven. Given the user industry continue to witness challenges due to the unforeseen pandemic-led uncertainty. But if we see the global economy basically coming out of this pandemic issue, then I think there would be more traction. There would be rather continuing demand in IT, and there would be more of such orders. Being the export-oriented sector, the appreciating rupee will provide a tailwind to the IT sector in the upcoming period. And but the orders which they are likely to get from their clients, and is what we think would be the trigger rather than depreciating rupee. See, the overall outlook for rupee is still positive, I would say, for the long term, because we think that dollar index has entered into a bear market, and that is likely to fall to the levels of 75 going forward. That is what is our expectation is, or at least for next within a year or two, we would see those levels. I mean, in the short term, we see that dollar index has reached to quite an oversold territory, so there can be some bit of short covering out there, or a pause maybe, which can get a pause in the equity, or maybe all the asset class which are moving against the dollar index. That can happen so in the short term, but if you see from the long term point of view, maybe a year or two, or maybe more than that, we see that dollar has entered into a long bear market, and that would continue historically also. One thing, if you see, whenever a dollar index enters into a bear market, that continues for at least 3 to 4 years. That's what the data which we have, and it's just been a year, and not even that. In fact, I would say rather. So when the dollar bear market started, so I think that we still have a couple of years going forward. So this rupee appreciating against dollar would be one thing which could be on the negative side, which would work for negative for the sectors, and one of which is IT. But I think the demand or the orders which they are likely to get because of the expansion globally, I think this sector will continue. So any dip you get in these quality stocks or these quality names, I would say you should take that as a buying opportunity going forward as well. And then, let me also focus on some more of the sector, COVID also and post-COVID also, I would say rather. But then this will continue because India FMCG story still has a long way to go. And in fact, I would say that it has already passed 1 decade of an uptrend, and we have seen some consolidation happening in this sector as well. But prior to that, if you see historically, friends, then prior to 2010, that is from 2000 to 2010, there was absolutely not much of expansion happening in FMCG sector, and we didn't see most of these things were priced into it, which are still getting. So I think it has much more room on the upside. I mean, you see, packaged food products and health and hygiene products will continue to lead growth going forward. So we need to be focusing, and we need to be stock specific out here, which are focusing out on these kind of products. But then overall sectoral point of view, I think FMCG has still much more way. Because if you see, technically as well, it has provided a breakout from a downtrend line resistance, which was there since 2018. So it has given a breakout from almost 2.5 years of downtrend line resistance, and that clearly indicates that a big structural or bull market has started here as well. Consumers have prioritized health, hygiene, and nutrition products, right? Given the COVID-19 outbreak, hence those products have seen a spike in demand during the first half of 21 FY21, and I would say that that this would continue going forward as well. People will continue to, or consumer will continue to maintain this, rather than once COVID is gone, maybe they forget these things, because that would somewhat we believe will form as a habit for them as well. Rural markets will continue to lead the growth for the sector, and that has been one of the reason, I would say, one of the major trigger why FMCG was doing quite good pre-COVID as well. And we have much more room to expansion out here. The reasons behind this robust demand in rural markets were the reverse migration. Okay, the highest employment under Manrega during 2020. Okay, and robust, I would say, rabi crop output up by 7% year on year in 2020, and good monsoon. This would be the triggers, I would say, for FMCG. The last sector which we are focusing on is pharma, right? Pharma has done quite well in 2020. We all know the reasons for that. And I would say that going forward too, pharma sector is one sector which is likely to perform quite well. It has come out of its long bear market, which started from 2015 and got end somewhere in the middle of 2020, or maybe Q1 of 2020. We started to see some green shoots out there, and it's absolutely out of the woods, I would say now. It is expected that pharma industry will grow steadily from year on, 10 to 11% growth due to the new drug launches, increasing in research and development spent by various industry players, shifting from acute segment to more towards chronic segments. Also COVID-19 has led to significant disruption in supply chain of raw materials and key starting materials, that is KSM, from China, leading to increase in API prices. And this is one of the leading factors wherein we can focus on those select pharma stocks which are linked to the APIs. So we can focus on these companies. Companies currently are looking at the suppliers apart from China. We all know the reason for that. So leading to increased demand for the Indian companies, and that has been one of the reasons, friends, I would say, why this sector has seen this kind of traction. So several API-focused companies have also proposed healthy investments in this segment. So these are the sectors, I would say, friends, which one should keep an eye on for FY 2022. And pharma, IT, FMCG, these were the sectors which have already performed quite well. Chemicals, but one inclusion which we have is automobiles, friends, and automobiles as well as auto ancillary, maybe, if you see from that part of view. So these are the sectors you can keep an eye on. Now, again, coming to the short-term view, friends. Now, short term, I think that Nifty is still likely to inch higher. Now, the revised target is 14,800, and thereafter 14,900. These are the levels which we are looking out, and we think that prior to our next YouTube live session, we do see these levels coming, these levels getting achieved. Recently, or maybe in today's trading session, we did see that the banking and financial sector again have started its uptrend, maybe after a few days of consolidation, but it didn't break 31,500 levels, which we mentioned that in the last session as well, friends, that it has broken out of 31,500 levels, and that would be a key level to watch out for going forward. And that was held quite well, I would say, on a closing basis. And from here on, as far as Bank Nifty is concerned, we think that 33,000, 33,400. These are the levels which we can look out for going forward. One more index which has actually entered into the futures and options, and that is it was launched yesterday only. Financial services. That is also, either you say that it is bigger than Bank Nifty, or maybe smaller than Bank Nifty. Is still not clear, but then I would say that Nifty financial services sector, from here on, is also likely to perform quite well. And we do have an NSE, in fact, has launched it into the derivatives segment, and we do have options as well, the weekly expiry out there as well. So sure, friends, if at all there is any opportunity out there going forward, either in the pair trade, maybe buy financial services, sell Bank Nifty, or maybe converse thing, buy Bank Nifty and sell financial services, or maybe some option strategies. Taking these two indices into consideration, we are definitely working on that. I'm sure that a few weeks down the line we'll be having a good product on this as well, which will be benefiting you all. Right, so we might have a pair trading or maybe some option strategies. That's all from my side, friends, in today's YouTube live session. And hopefully in the next YouTube live session, we'll be having a Q&A session as well, right before the budget. Thank you so much, friends.